doing a lot more economy videos because there's things that are changing every single day, and if you do not get into the details, you will miss crucial information. In this video, I am going to update you guys again on the stock market, your 401ks. Is the housing market gonna crash? The economy, jobs, unemployment, and everything in between. This is gonna be a really good jam-packed episode, so be sure to tune all the way in. No distractions, okay? Keep it locked. It's Crystal with the Cash Compass. Welcome back. I am here to teach you everything that you should have learned in school about money, but for some reason they forgot to mention it. Please be sure to subscribe because we talk about everything from personal finance to investing to the economy. Let's get into it. So let's recap quickly what I said would probably happen in my previous video on the economy, which if you want to see the whole thing, click up here. But let's recap on what I said. I think that they will continue to cut rates. We will probably see another rate cut in March. I do think they will be printing more money and purchasing more assets to help inflate the stock market. I believe that there will be bailouts for certain industries like the airline industry, banking, energy. Again, negative interest rates might be coming to America. I was right. The only exception is negative interest rates, which it will happen. It's just a matter of when, really. Everything that I said that was gonna happen has happened. It's not because I'm a psychic, it's because I know where to look for information. And I present it to you guys because I love you. It's safe to say that we are in a recession, and I did mention this in my latest video, but a recession is 2 quarters or 6 months of negative growth. So you won't really know we're in a recession until 7-8 months from when it actually started. So I think this is the beginning of it. Everything that is going on right now happened in 2008. It's just a much greater scale. So if we're doing things like lowering interest rates, rock bottom, and lowering reserve requirements and all these crazy things, we're there. Let's start with stimulus. In my latest video, again, up here, I went into detail on the stimulus packages. So if you want to get a breakdown of each little piece, click that. The packages do not really help us because we are the ones that fund all of this through our tax dollars, and individuals pay the most taxes by a long shot, okay? Corporations don't pay as much as we do. So we really do get slapped with this. These too big to fail banks and these big companies and these big industries have been rewarded for bad behavior. And that is a moral hazard, because if you do something bad and get rewarded, would you want to do something good? I mean, if I went and stole a car and when they caught me, they gave me a house, next time I'm gonna steal the house and get me a private jet. Back in 08, they had predatory lending. They were giving loans and homes to anybody with a pulse. You alive? All right, here goes $1 million. Obviously, everything came crashing down, and what ended up happening? They ended up getting bailed out. So guess what? Things have not changed. If I know, okay, well, worst case, I'm gonna just get me a bailout, I'm gonna just keep on doing what I was doing. And that's exactly what's happening right now. There is no motivation for companies to actually have a business model that makes sense, to actually make money. There are so many zombie corporations. Something like 25% of companies right now are zombie companies. Zombie companies are companies that do not make profit. They might have revenues, but their expenses exceed their revenues, and they're pretty much the walking dead. When we spend more than we make and we can't pay our debt, it's just, oh well, you better go file for bankruptcy. But when these big companies do it, it's, oh, I'm so sorry that happened to you. Here, take all this money. I'll make the taxpayers pay for it. So what is the long-term effects of all this stimulus? It's really hard to pinpoint what's going to happen because there are so many moving parts. But let's just go over some of the potentials. So potential number 1 is same thing that happened in 2008 can happen right now. They start injecting so much money into the economy, but it goes to reinflate things like the stock market and real estate. So you'll think, okay, well, there's no real inflation. My food for the most part is around the same. My house is worth double. My stocks have gone up. My 401k is looking fat. Life is normal. I don't know if that's going to happen this time around because it's a lot more money that is going to be poured into this economy to save it. But that's option number 1. Option number 2 is a hyperinflation. Hyperinflation will be like a Venezuela or Zimbabwe, where 1 week your grocery is $500 and literally next week it's $750, and the week after that it's $1,000. And that happens because, again, a whole bunch of money printing, but this time it's going into stocks and real estate and everyday expenses. It's just so much money trying to crowd in to get one thing, the price quite naturally just goes up. And typically when this happens, your wages don't keep up. So your groceries might have doubled, but nothing else doubles. Your money is still the same. Another option is deflation, because even if they print all this money, they want to force people to go out there and spend, right? They don't want to be in a recession. But the thing is, everybody quite literally is locked up. You can't go outside. I don't know about you, but I've been saving me a lot of money. You can't do anything. So even if they stimulate and they put this money in and they put the interest rates down to 0, okay, I would like a new house, but I can't even leave my current house. So it might not be enough to motivate people, because people are still deathly afraid of what is going on right now. So then what you'll see is deflation. You'll see home prices plummet, and you'll see stock market go down because everybody is liquidating. So they're selling whatever they can just so they can eat, just so that they can live. There can also be a situation where big ticket items are going down, but food is going up, because obviously people are desperate to get food. People will freak out and people will think about themselves only. So there'll be a lot of money rushing to those items, and we can see those items skyrocketing and other bigger items plummeting. So what do I think is the most likely outcome? Well, if what they're saying will hold true, and basically we will be locked down for months, I can see deflation happening first. Or at least that's what I hope, because I want to kind of get up in there. But what I expect to see is things going down, and then them injecting so much money that eventually we might see hyperinflation. Again, I think that's a long-term thing, but I think that things kind of take a slope down and then they shoot up. So what would that mean for the various investments? For the stock market, several of the largest banks have said they will not be doing stock buybacks. And again, if you look at this chart, companies are the #1 purchaser of their stocks. So if these companies are not doing their stock buybacks, that basically means the largest purchaser, the biggest buyer, is no longer there. So I would expect to see those stocks going down. So that one piece alone can cause significant drops in the stock market. Back in 2008, the Dow Jones, which is pretty much what people look at the most, was around $6,000 or $7,000 before they started doing all this stimulus to prop it up. So it went from 6,000 or 7,000 up to 29,000. So we don't really know what the real value of the stock market is, because it was a lot of inflated fake money being put in there to prop things up. So where is fair value? I don't know. But if there is no funny money injected into the system, and the biggest buyer is no longer buying up stocks, and we're still dealing with this disease, you can expect stocks to go down. But I did want to kind of make a point about buying the dip, because I think a lot of people you'll hear kind of repeat this whole buy the dip, dollar cost averaging, and it's like, this is not a dip. That's a crash. This is a dip. We're going down, dip. This part right, you are here, that's the dip. I don't believe we're here. I believe we're down here, in my opinion. And what's unfortunate about 401ks is, again, people don't really know what they're invested in. 9 times out of 10, they have absolutely no clue. They just set it and forget it. And you're probably hurting right now. And then to make matters worse, you want to pull your money out. But if you're young and you're not at that retirement age, you're going to get charged 10%. And it's purposely 10% to dissuade you from pulling your money out. You want to get out because obviously stocks are doing terrible, but then you're like, wow, I'm going to lose another 10%. But then another week goes by and you just lost 13%. So you're like, I don't want to take 10% off of the 13 or the 30% that I've already lost. So it's designed to kind of keep you locked up. You gotta do what you're comfortable with. You want to ride the wave, you know, it's gonna go down but it'll go back up. Yeah, that will potentially happen. But again, that's another thing that I think people say because it sounds good, but think about what's really happening. When your stocks go down, that is a wealth transfer. I'm gonna do a ghetto visual for you so it can make a little bit more sense. You start off with $10 in the world, okay? And this is extremely simple, just to kind of bring that point home. Company A has a stock. You have $5 and I got $5. You say, company A looks pretty good. I want to invest in company A. So you give company A your $5 in exchange for their stock. So now what happens is company A has $5, you have a stock, and I still have my $5. Boom! Economy done. Everything broke up. And now you're desperate because you got bills to pay. You need to liquidate your assets so you can go ahead and get some food. So you try to go sell your stock for $5. But I'm like, there's no way I'm paying $5 for that stock. You can only sell it to me for $1. Now how does the world look? Company A has the $5 still. You only have $1, and now I have $4 plus this stock. That is a wealth transfer. You're not losing money to money heaven. Your wealth has been transferred. So when you say things like, yeah, my stock is going down, but it's okay, it's gonna go up. that translates into, yeah, I just gave that random person my wealth, or this company my wealth, but it's okay, like eventually I'll make more money. And if you're okay with that, then that's fine, but let's call it what it is. It's not a loss, it's a wealth transfer. The money didn't die. So housing, like I said, we may or may not see a housing crash. If they can get this cleaned up and they can keep on forcing money into those markets, you might see housing get even higher. But eventually what comes up must come down. You have to determine, are you comfortable with waiting? If you want to get into the housing market, can you afford that? What if you lost your job? I mean, there's a lot of factors that go into it. Personally, I will not be buying anything. I'm kind of just waiting. So basically, we are in some interesting times, you know. I just, all we gotta do is kind of wait around and see. I can't tell you what you should do, but all I can tell you is make sure you have all your bases covered. And what I mean by that is not only thinking about the financial aspect, you know, like where should I put my investments, or how should I allocate my portfolio, but also, do I have enough food or toilet paper, I guess? What about protection, right? What about self-sufficiency? I will be sure to keep you guys updated and offer my perspective. So please make sure that you are subscribed. And if you did like this video, then give me a nice juicy thumbs up. All right, so that will do it. Let me know what you think in the comments. Please be sure to, again, like and subscribe and share with your friends, because it's extremely important that we get this information out. And until next time, keep your money up.